Alrighty, welcome to bullwaves.org. This is Enda here for the weekend video, and as usual, if you're interested in nightly Elliott wave updates, check out the website bullwaves.org and join. That's just simple. Join, and you'll have nightly Elliott wave charts and update from me, and it's all one big happy family. Eh? All right, sales pitch complete. Let's move on. To the reality of the situation. Okay, let's see if I can get there without. Oh yeah, okay, move right now. Here we are. I'm going to move. I'm going to start on Eurodollar, and I'm going to move on from there. Okay, so things are happening this week, which require, let's say, some adjustment, and you'll see what I'm doing here. Now, this is what I've been tracking. I should go out longer. This is the daily chart in Eurodollar. This decline I've been tracking as a wave C of B. Now, the problem I'm having is, when is this wave C complete? The recent rally was reasonably impulsive. I'll show you here. We made some headway. We made, 400 points. That was worth, considering as an impulsive rally. And then, we declined. So here's the hourly chart. There is an alternate count here for wave 4. This would be wave 3 low, wave 4 high, and then we'd be tracking 5 waves down in wave 5 of C. So it's still the same wave C, complete wave B, and then a larger degree wave C rally would come after that. But as has been the problem, when do we get to the low of this final 5th wave? Now, the main count has not been, it has neither been invalidated nor has it been validated. So we're kind of stuck in limbo, and we're stuck in a range. So, the action is, I would say, fitting towards my frame of mind right now. I was willing to call yesterday's rally as a possible third wave of wave 1. We have retraced enough today to pretty much rule that out. So I think I'm kind of, I'm not going to say I'm fully in favor of the alternate count, but it's definitely a coin toss at this point, whether we are going to see a new low in wave 5 of C. So I'm going to wait out on that one, possibly early next week. At this point, I'd just like to see a break of it and complete 5 waves down, and then just move on from this pattern. We'll see. It looks like we're locked within this for another while yet. Okay, let's move on. Crude oil. Sorry, not crude. Sorry, cable. We're kind of in a similar situation. I did trigger the alternate count on this one for wave 1 down. It looks like we're creating a new low in wave 5 of 1. So again, it's just a 5-wave pattern lower in wave 1, and we should retrace higher in wave 2. The point being, when do we get to that final low in wave 5? Excuse me. Now, here's what I'm working with at this point. Wave 4 high, we have a possible 1-2 acceleration third wave. 3 waves up in wave 4. So far we've failed below the wave 1 low, so that leaves us with, while it's not a perfect, let's say, textbook pattern. The retracement in wave 4 was quite, an order of magnitude larger than the retracement of wave 2, but nonetheless, it depends really on how you might, where you might count the wave 1 low at. Even if we look at it this way, it's still a much larger retracement in wave 4 than it was in wave 2. So we're looking at wave 5 down. So far, wave 4 is still holding below the wave 1 low. So at this point, we're still let's say in line for a new low in wave 5 of 5 of 1. So that's the outlook right now. A new low to break 119 probably, and then I'll look for another impulsive move up to begin wave 2. So let's see how that goes. Here is dollar yen. The decline this week was enough, let's say, to call attention to the possibility of a top in place. But then we had this massive retracement today. We haven't broken to a new high yet, but I'm willing. Oh, I'm willing to at least give it the benefit of the doubt here that this is actually wave 1 down, and this is only a correction higher in wave 2. Yet to be proved wrong on that, but we're close to invalidation. So I'm kind of, again, I'm looking for a large degree turn in the dollar negatively towards the dollar. Because we are, I think there was finally a recognition that this bear market may only be just getting started in wider, in the wider credit markets and in the stock market. So, which again indicates that I think we've most definitely started. We're probably 3 months into a recession, maybe even 6 months at this point. But the realization is kind of, it's ringing in people's ears now that they're running for protection. And I think that has been, let's say, the knee-jerk reaction in the dollar over the last few months has been a flight to safety, a flight towards the dollar, a flight away from any sort of risk whatsoever. So the gorilla in the room, the 500-pound gorilla in the room, that is the U.S. markets, are running back towards the dollar again. So hence, you will have a rally in the dollar. Anyway, I do think that we will get a corrective decline in the dollar pretty soon. Again, it's been a frustrating process try and track that as it's been happening. Okay, nonetheless, the task remains find the top. So we'll keep sniffing. Okay, this is the Dow. It's the 4-hour count on the Dow. I should go out to the daily count. We had a failure, a pretty significant failure on the daily chart here, and I was pointing it out as it was happening. On the nightly updates, we were, let's say, since February, we've been tracking lower. We've had a series of lower highs. We've had a series of, corrective retracements. We've had a pretty serious and consequential failure below the 50 daily moving average here. And as that was happening, we were pointing it out, and I was looking at it as let's say, a confirmation point for the bearish outlook. And I think we've got that right now. The idea being that this is most likely a wave 1 of a third wave down. So this is wave 1, 2, wave 1 and 2, and this is wave 1, 2, which should result in most likely an acceleration lower into a third wave, and most likely final realization that that this is going to be much more than a common or garden retracement. So look out below. Again, I want to point out that we are now back to the February 2020 highs. So before the COVID crash happened, we are right back at that level again, and this may be the pivot point to watch out for. Okay, let's move on. This is the 4-hour count. So we've got that 1-2 pattern, another 1 and 2 pattern, and a pretty solid 5 waves down again into today's lows, which is counted as wave 1 of 3 of 3. So this could be a third of a third of a third decline once it actually starts. So this could be an acceleration to write home about when it does get going. Okay, so right now, I think we've probably done enough to complete this wave 1 into wave 3, and I have been kind of on the lookout for a corrective retracement higher in wave 2, and I've been pointing out on the nightly updates that we should be getting, I think, a relatively smaller correction in wave 2 here than we've had previously. So, if we failed at the 50% retracement there, we'll probably fail at 38% retracement here. So whether that brings us up to 31,000, we'll see if it does or not. On the hourly count, you can see we've got 5 waves down in wave 1. We're running out of steam, I think, on wave 1 here. So next week, I'm going to turn contrarian and I'm going to look for a rally. I don't know if this is going to happen or not, but obviously this is just forecasting. The pattern suggests that we've got 5 waves down complete in wave 1. Maybe we punch to a new low before we begin a rally in wave A of 2. I am looking towards, let's say, that 31,100, 31,200 level for wave 2 to complete. We might even spend the rest or most of next week correcting higher in 3 waves in wave 2. So probably a little bit of relief coming for the markets early next week in wave 2. So let's see how that pans out. And obviously, if you're tracking this night by night, you should probably join the website. Okay, here we go. Let's move on. Gold. I'm going to go daily chart here for a second. This has been the main count: a wave, a fourth wave triangle, a rally in wave 1, an ABC down in wave 2. Okay, solid. I think pattern, a solid way to look at what's happened. Throughout the last couple of weeks, the alternate count has been emerging as another possibility. So the idea for the alternate count would be 3 waves down in wave A, 3 waves up in wave B, and then a 5-wave decline heading our way in wave C. If we do get a 5-wave decline in wave C, we could fall towards 1650, probably a break of 1660 anyway. Yeah, at this point, probably going to fall into 1650 or even more, depending on how this 5th wave down comes. If this is a C wave decline, we should be expecting 5 waves down, and this would be wave 1, 2, 3, 4, and 5. Final dip in wave 5 to complete a large, multi-year correction now in gold in wave 4, and then the rally, the inevitable rally in wave 5. Once everybody's given up hope on governments, on markets, on bonds, on everything. So let's see. That's the alternate count right now. Go to the 4-hour count. You can see here I've marked it out a triple lower in 5 waves in wave C of 4. We haven't confirmed this pattern yet, but enough happened this week in order to kind of start ringing the alarm bell, and that's what I've been doing. We have a low at wave 2 to look for. That's about 1785. If we break that, we're pretty much full on for a reversal down in wave 5 of C. Here is the hourly count. You can see again the alternate count marked. This could be wave 1 and 2. I don't know yet. Like I said, the alternate count has not been either. It hasn't been triggered yet, so it is a warning shot. I think what happened this week. The main count is beginning to look very stretched. It's not impossible. We still have a possible 5-wave up. We have 3 waves down in wave 2. So we have A, B, C down in wave 2. Excuse me. I always yawn at this time of the evening. Okay, 3 waves down in wave 2. And a possible impulsive rally building in wave 1 of 3. Now, I've been saying throughout the week that this really has to develop pretty soon in order for this count to remain valid, and it hasn't done yet. It hasn't done that yet. So, I'm on the fence here, and I am looking below at this point. We have a wave 2 low at 1804. If that breaks, I'll pretty much trigger the alternate count. To confirm the alternate count, a break of 1780 would be the ideal low to look for. So let's see how that goes next week. Okay, crude oil. That's quite a whopping decline this week. And needless to say, I've been looking for declines in crude oil, and here they are. Now, we have not confirmed a 3rd wave down yet, but we are, quite close to fulfilling wave 1 of a possible 3rd wave down yet. So the main pattern being an impulsive decline in wave 1 back in March, was it early March? And then ever since then, we've been correcting to the side, correcting sideways, complex correction in wave 2. We ended that complex correction with a wedge pattern higher. We've been tracking that wedge pattern higher. We gave targets around the 121 level, and now we've spilled lower, even back below the 110 today. So that is a level that I've been looking at throughout the last couple of weeks. That previous fourth wave low, at this point, the decline in wave one is not ideal. I'm going to give you that. It seems to be overlapping. It could be a wedge. It could be a leading wedge. Let's say I'm not dogmatic about it at this point, but enough happened today to consider a possible third wave. We were looking for a third wave down. Well, actually, I was looking for this second wave to complete probably by the end of this week or early next week, and then next week for a third wave down to come. But here we are, a pretty significant spill lower today, and I don't know who was selling, but man, they sold in a big way. If we have a wave too high now in place in around 116.50, it looks like wave 3 down should at least not break that level as we go forward. Now, the outlook here, if we've got a wave 1 and 2 done and we are accelerating, which it seems to be what we are doing, accelerating into a third wave, then I would look for a continuation down, continuation lower over the next week anyway, and we complete 5 waves down in a larger degree wave 1, as I mentioned on the larger chart there on the 4-hour chart. So let's get this, excuse me, let's get this over here, and let's get you in. Okay, wave 1 in blue. So you track 5 waves down wave 1. Now, the larger bearish outlook will probably be triggered if we break the previous wave too low. So that comes in at about $97. We break 97 again, I think, well, at least we'll have wave 1 done. Wave 1 will probably complete above that, but we break 97 again, that'll be a larger degree third wave down. I think that would be pretty much, at that point, we will have recognition of a recession in the Western world anyway, probably spilling over to China if China's not already in recession, which it probably is. At that point, God forbid, well, I won't mention anything about more wars and rumors of wars. Go read your Bible, you'll find more about that. Okay, a third wave down in wave 1 seems to be the idea today. It seems to be confirmed today. I would probably look for more downside in wave 3. It looks like if we throw a fib level on it, we'll probably come in close to 106 for wave 1 equals wave 3. We should, I would suggest we should break below 106, probably towards the 102, 103 level for wave 3 to complete. So that'll be the idea early next week. But if we get recognition that we're heading into a major recession, even depression, then I think it's sayonara crude oil. I don't care how wedded you are to the supply issue or the supply constraints or the inflation idea, because I think both will be blown out of the water by a recession in the Western world. So what will be happening this time next year, and you can bookmark this point, it'll be speaking about how cheap oil has gone. That's an oil. We'll probably be looking at oil company bankruptcies next year. That's what we'll be looking at. You heard it here first. Okay, S&P 500. I was looking for a third of a third over the last week, third of a third decline to begin, and it looks like we're well underway in a third of a third. I think it could be just 5 waves down, wave 1 of 3 of 3. So again, a second wave correction is probably on the way. And again, we'll probably correct towards the 3900 level, and we'll spill then down into a third of a third again. Well, I'm pulling this out of the air, probably the week after next. But so far, it looks like we've got a wave 1 and 2 and further wave 1 to begin wave 3. So if we get into the hourly count here, we've got a 5-wave pattern lower. We're coming in towards the lower end of the lower edge of that declining channel as well. So it looks like we'll get some support pretty soon, and I would be looking for a 3-wave correction higher towards 38,900 next week, and that's, it's pretty much in line with what's happening in the Dow right now. And if you've been following the updates over the last few weeks, this is what I've been looking for. So you can go back and test me on that. Okay, S&P 500, or this is the silver count. Now, I'm going to raise a flag here for silver that I may not have even been raising throughout the week. That is the possibility of a 1 and 2 wave already done off a completed wave 4. That was the alternate count. I think we may be weighing that a little bit heavier tonight when I'm updating. Overall, I was looking for a larger 4th wave correction, which should lead to a 5th wave decline, but we may have enough done, and the very distinct lack of a 3rd wave rally I'm saying may an awful lot, but I do need some confirmation here. So I'm kind of going out on a limb here, pushing the alternate thesis here, my own alternate thesis. I'm going against myself. I'm going out on a limb against myself here. So what I'm doing right now is I'm sawing off the branch that I'm sitting on. So the Wave C rally being the branch that I'm sitting on, and I think I'm about to saw it off tonight. If this is a 1-2 rally to the downside, then I think we are already underway in wave 5, and we will probably see a break of $20 next week, break into maybe even $19 next week. So while we haven't been while this count has not been ruled out for wave C, I would be just keeping an eye on, first of all, that $21 level, and then below that, sorry, 21.30 level, and then below that 20.90 level where wave B now resides. We break that, and I think we're underway in wave 5. Okay, let's move on in Bitcoin. This is the 4-hour count. I've got a daily count here. Now I'm going to bring you back to November 21, when we were at 68,000, pushing $70,000 in Bitcoin, and I was tracking 3 waves up to an irregular top. So this would be an expanded flat top, wave B, and I was saying that this thing is going to crash. And boy, have we had one heck of a crash. I gotta blow my trumpet when when it's actually relevant. If you go back to the November updates last year, you'll see that this is the chart that I was showing, and I was calling for a C wave decline. Now I'm going to shock somebody. I think I'm beginning to think that this may only be wave 1 and 2 of this wave C decline. So, I'm going to throw some labels on this, and I'm probably going to get in trouble, well, with myself anyway. This could be wave 1, and this could be wave 2. And if that's the case, well then good Lord, there's a whole lot more left in this crypto bear market. Now, if this is wave 1 and 2 and this is wave 3, well then we should probably fall back towards 10,000 in a 3rd wave down. We'll probably consolidate around that left-hand shoulder here between, I'm just going to give you a ballpark of about 10,000, correct sideways in wave 4, and then fall again in a 5th wave down. By the time, if I'm correct here again, if I am correct, by the time that this wave C is done in wave B, we could be down near, we could be down below 5,000 again. We could be into below 1,000 again. So, all right, that's the shocker. How do we get from 70,000 down to 1,000? And that's how it happens. An expanded C wave decline. That's how it happens. Now I'm going to go to the 4-hour count here, and I'm going to track, let's say, the tamer version of that count. Okay, if we are declining in wave 5 now, so that'd be wave 5 of C, then I think there's still more downside, but we should we'll probably find a low. Actually, I'm going to put some, let's say, brackets on this. We'll probably find a low towards 15,000 if this is wave 5 already underway. Now, I can't guarantee that. All right. So go to the hourly count. Needless to say, I think this is a third wave decline of wave 5 of wave 3. So this third wave here has a little bit further to go. And if it's a third of a third, a third of a fifth of wave 3, then there's probably a little bit more before we correct in a fourth, and we fall in a fifth wave down. So this wave 5 of wave 3 has even longer to go. So I think there's probably a few, there's a couple of extra numbers to come off this price here before we find any sort of a projected low for wave 5 of wave C. And going by this count, it's going to be another while. And most especially, you get a confirmation of a recession. We start seeing housing dip, which I think it will very, very quickly. And we start seeing layoffs come, thick and fast, which I think they will very, very quickly, because all medium-sized businesses are already shedding jobs, and in a pretty large manner. Then I think we might be talking about that $1,000 low pretty sooner rather than later. Okay, let's move on. I'm going to go to the Nasdaq. Nasdaq 4-hour. Okay, I think we are bottoming in a third wave pretty soon. If we have wave 1 and 2 done, this is an extended third wave. I think we'll probably go a little bit lower. I am looking towards, again, around that 10,500 to, actually maybe even a little bit lower than that. Maybe even a break of 10,000 before we finish this large degree third wave down. Back to the 4-hour count. Wave 3, if we complete somewhere around 10,000, then we'll correct higher in wave 4, and that should hold below that 12,900 level at wave 1. So we'll correct. I don't know how it's going to. Obviously, I have no idea how the pattern in wave 4 will come, but I think we're close enough to a low in wave 3 to start thinking about wave 4, maybe towards the end of next week. Unless all pandemonium breaks loose and we have a big gap lower, an acceleration into a larger third wave, which can also happen. Okay, so here's the hourly count. Possible third and fourth wave done, and heading lower in 5 waves in wave 5 of 3. So I'm looking towards that lower trend line there. Call it 10,500 in the Nasdaq before we correct again in wave 4. Forgive me. Okay, I think that is it. I've run my mouth off enough, and as always, I start with the good news of the economy. It was one of the great news in the markets, and I end then with the even better news of eternal salvation. And you might think I'm an idiot, but last year I was talking about, or the year before last, I was talking about war cycles rising, the very real potential of an economic collapse, and I think we are marching into that scenario in a big way. So we're talking about those horsemen and those riders, and boy, are they breaking out. If it is the case that those horsemen are on the loose, then I would suggest that you maybe look towards your salvation, and there's only one salvation. I used to be an ardent, and in my younger days, I've been an ardent, libertarian Republican. Now, no way. I'm still liberty-minded, but liberty in Christ, and I am no longer a Republican. I am an ardent monarchist, because the king is coming, and the king will rule on this earth again. So your salvation depends on your righteousness. And as Isaiah said, Prophet Isaiah said that our righteousness, our own righteousness, is like filthy rags. And when he spoke about filthy rags, he meant, the female toiletries. That's what he spoke about. So it's that bad. That's our righteousness is like soiled toiletries in comparison to a holy and perfect God. So the only way that we can have righteousness and have communion with God is if we have the righteousness of the Messiah. And the only way to obtain the righteousness of the Messiah is to declare for the camp of the Messiah, basically. And any Jew can do this, any Muslim can do this, any Hindu can do this. You have to recognize that the Messiah has come, that he died for your sin. He took your sin to the cross. He paid for it. And the reason that you can have the righteousness of the Messiah is because your sin has already been paid for. All you have to do is recognize it. And then, you walk under the umbrella of the kingdom. You are then, your allegiance is confessed for the Messiah. You admit that you're a sinner. You believe that Jesus died for your sin. And then you confess yourself as part of the camp of the Messiah. You are in the kingdom then. You are a son of God then, or a daughter of God. And you gain the righteousness of the Messiah. He gives you his righteousness. He gives you his blood, basically. You got his blood covenant. Covenant in my blood, as he said. This is the new covenant, the covenant in my blood. So if you want eternal salvation, you may die today, you may die tomorrow. I would urge you to go into eternity with the righteousness of the Messiah covering you, and then you will be welcomed into eternal life. No Hindu god died for you. No Muslim prophet or God died for you to give you his righteousness. The only God that died for you is the God of Abraham, Isaac, and Jacob in the form of Yeshua the Messiah, Jesus the Messiah. He died in order to pay for your sin. So that is the end of the both the market update and the plea for salvation. And until next week, if I'm still here, and until tonight, for all you website members, God's blessings to you all, and adios. Have a nice weekend. Bye-bye.